A very good morning, everyone. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Shreyansi Singh. Well, over the next 1 hour, we'll get you top developments from India and around the world and also tell you about the stocks to keep on your radar today. Well, first things first, sure, it's April 2nd today, the day Trump's tariffs are to be implemented. However, the announcement is expected only tomorrow morning for us in India, as Trump will unveil details of the tariffs on his Liberation Day in the afternoon US time. Well, just ahead of tariffs, let's first get you a check of how the US markets are faring. Shreyansi, over to you.
Well, absolutely. This is the deadline that we've been talking about time and again, right? April 2nd, and the S&P 500, when you take a look at the session before this, the S&P 500, of course, finished about 0.4% higher, seesawing between gains and losses throughout the chaotic trading day. When you take a look at the Nasdaq as well, you're looking at the Nasdaq ending roughly just about 0.9% higher. Dow Jones as well closed marginally lower, so you do have a mixed bag coming in as far as the indices are concerned. Quite the topsy-turvy trade coming in as far as all of the three indices are concerned. In fact, stocks have come under pressure as uncertainty around Trump's tariffs is something that has spurred recent market volatility. So you're seeing a little bit of that coming in at this point, with the broad market index also down 5 of the past 6 weeks, in fact. However, some investors think that the sell-off is overdone at this point. You also do have, in terms of macroeconomic data, you have Bureau of Labor Statistics reporting that job openings dropped more than expected in the month of February, with available positions also falling to 7.57 million for the month, and that's just below the estimate of 7.6 million as far as that particular data set is concerned. But you do have that April 2nd tariff deadline. That is the one that you should really be watching out for. And when you take a look at stock futures, little changed ahead of those tariffs kicking in, Kanishka.
That's correct. Now moving on, let's get you a crude check. Well, oil has eased off its 5-week highs as traders are weighing the impact of imminent Trump tariffs. Now, Trump is due to announce the reciprocal tariffs on Wednesday, which could intensify a global trade war. However, Trump's threats to impose secondary tariffs on Russian oil and to attack Iran fueled supply worries, limiting losses. Now, the Brent closed 0.5% lower at $74 a barrel. During the session, it was high at $75 a barrel as well. The US WTI crude also fell 0.5% to $71 a barrel. Now remember, these moves come as the White House has so far provided no details about the size and scope of tariffs that it confirmed Trump will impose on Wednesday. Now slower global growth would dent fuel demand, which might offset any reduction in supply due to Trump's threats. Now, remember, Trump had on Sunday said he would impose secondary tariffs of 25% to 50% on Russian oil buyers if Moscow tried to block efforts to end the war with Ukraine. Now, tariffs on buyers of oil from Russia, the world's second largest oil exporter, would disrupt global supply and hurt Moscow's biggest customers, that are China and India. Now, Trump has also threatened Iran with similar tariffs and also with bombings if Tehran did not reach an agreement with the White House over its nuclear program. Prices found some support after Russia ordered Kazakhstan's main oil export terminal to close 2 of its 3 moorings amid a standoff between Kazakhstan and OPEC Plus, led by Russia over excess production. Now, the market will watch an April 5 OPEC Plus Ministerial Committee meeting to review policy. Moving on, looking at the yellow metal, gold has also paused for a breath after a record run on safe haven demand. The prices eased yesterday on profit-taking but remained near record highs as investors turned to safe haven assets ahead of Trump's planned announcement of sweeping tariffs on countries that have a trade imbalance with the US. Now, spot gold was down 0.3% at $3,113 per ounce. This is after hitting an all-time high of $3,148 earlier in the day. Now, gold, traditionally seen as a hedge against geopolitical and economic uncertainties, closed out its strongest quarter since 1986 on Monday and climbed over $3,100 per ounce, marking one of the most significant upswings in the precious metals history. Now remember, Goldman Sachs raised the probability of a US recession to 35% from 20% earlier and said that it expected more rate cuts by the Federal Reserve. Now, the non-yielding bullion thrives in a low interest rate environment, you must remember.
And let's get your check going on what events you should be watching out from the US. Of course, you do have the ADP employment data, so that's the one to watch out for. Other than that, it's the last day to buy shares to be eligible for interim dividend when it comes to United Spirits. So keep an eye on that counter as well. And there's an ECB executive board member who's going to be speaking. So that speech is going to be in focus. And PM Modi, of course, is visiting Thailand. So keep an eye on that visit as well. But Kanishka, no points for guessing what's the top story of the hour.
Absolutely. Let's kickstart the show with some of the top global headlines. Well, the world braces for a seismic shift in the trade policy as Trump administration prepares to roll out its reciprocal tariffs from 2nd of April, which will target the nations that impose higher duties on American imports. US President Donald Trump has framed the move as a necessary step to level the playing field, ensuring that countries benefiting from favorable trade terms with US face equivalent tariffs in return. Now, Trump has touted his tariff policy as a game changer and pledged a rebirth of the US economy with Washington's major trading partners like India and China and the European Union in process. Listen into those excerpts.
We have some big things we're going to be announcing over the next 2 days that you know very well, Peter, and I think it's going to be something that's going to bring a lot of wealth back to our country, tremendous wealth back to our country, actually. And other countries are understanding it because they've been ripping us for 50 years, longer. I think this is going to be an amazing, I call it a lot of different names, but it's really, in a sense, it's a rebirth of a country because how we could have afforded to do what we did. We help everybody, and they don't help us. I really, the term I like best probably is the liberation of America. It's the liberation of this country because it's incredible. Look, we have 36 trillion in debt for a reason, and that accumulates over a long period of time. So I think what you're going to be seeing over the next couple of days will be very inspiring to a lot of people.
Or rather, embracing for a shift in tectonic plates when it comes to trade then. But market experts Mayuresh Joshi as well as Job Tennis talk about the impact of Trump's tariff policy on the auto, pharma and textile sectors. In fact, they believe that while auto tariffs can linger, it's unlikely for pharma tariffs to continue. Let's go across and listen in.
The US economy is now very weak and it's probably going to weaken further. There are concerns, of course, about inflation at the margin. Stable around the 3% level. The tariff increases will make that inflation story worse in the short term. And although I think President Trump has this wonderful idea that everyone is going to bring all factories back to the US, is going to be beneficial to the US versus other countries, I think in truth what it's going to do, it's going to lower all boats in the water, including the US. It's going to be a major problem for global growth.
Outside US, I think India has the largest amount of FDA-approved facilities, and the cost of making generics and the cost of developing a new drug, it is a time and a cost effort. And therefore, I think all these elements, if they're put together, ultimately the end user cost is going to go significantly higher. And that's going to pinch the US consumer quite hard and quite significantly as well. So in my own opinion, again, I think autos, the rhetoric might still continue because he still wants to make the US manufacturing theme continue, specifically for autos stroke industrials as a policy. But for pharmaceuticals, I don't think that the rhetoric will probably play out. Similarly, I think in terms of textiles, a large pool of the textile market is largely dominated outside India by China, Bangladesh, and Pakistan. And therefore, I think the expectations in terms of a significant amount of tax coming through might also mean that the end user might actually have to pay a lot more when it comes to pillows, blankets, bed sheets, as an example. And therefore, how sustainable is that going to be is a big question mark.
Well, that's the expectation when it comes to tariffs. Now, moving on, shifting focus to the yellow metal then, which has hit a record peak yesterday amid the reciprocal tariff announcements, which will fuel inflationary pressures. Meanwhile, in an exclusive conversation with ET Now, Saya Mehra, the former chairman, JDC and director, Unique Chains and Jewels, Ashish Pete of Vaman Hari Pete Jewelers and Vikram Dhawan from Nippon India MF discussed the recent rally in gold prices and how they expect the yellow metals prices to shape up going forward. Listen into an excerpt of that exclusive conversation.
Particularly if you talk about 2025, gold started with a bang. And the main driver now, so far, in the first 2-3 months, is the investment demand through the gold ETFs, especially in North America, which has come back after 4-5 years. So I think that various factors, and obviously investors right now are buying because of so much of geopolitical, geofinancial, sort of uncertainty. That's why they're buying. So I think we'll have to wait and see that what factors play out in this year. But definitely investment demand, which was dormant for the past 5 years, just to give you an idea, the ETF holdings in the past 5 years have come down by 30-35%. And so we have seen that ETF flows coming back. Now, how much of this ETF flows will take up the slack from the physical market? Because obviously at higher prices, you'll see some demand destruction. It remains to be seen. But again, if it's a 4-cylinder car, 3 cylinders are still firing for gold.
Aspect, which is silver. Historically, I have seen it, and you've seen it, and all of us have seen it, that gold and silver, you speak in the same breath, Sona Chandi. But silver has not gone anywhere. Gold is going up. Mathematically, can I say that next 3 years silver will give better returns than gold?
Interestingly, last many years, there has been talk that silver will always outperform gold.
Ulta ho raha hai par.
That has always been the case. And I agree with Dhawanji that 4 cylinder mein se 3 cylinders will always be supporting gold. But it is the central bank buying which has supported gold, and that's where the dissonance is there.
Here's some data which is that silver does well when there is growth in the world. Gold does well when there's uncertainty in the world. Silver is highly volatile, but it's like equity market, keeps on going up and down on a longer term basis. Any volatile asset, if it is productive, it'll always create more wealth. So that same question. And I'm sure this question has been asked to you. What to buy, gold or silver?
As an investment for long term, still I would be very bullish on silver.
Okay.
As we've seen silver reaching $50, it has touched the high of $50. Now it is $33, $34 only. I see maybe from a 99,000 or 1 lakh rupees of silver increasing to 1,35,000 by the next year end, क्योंकि जो सोना या चांदी है, सोने की रैली यहाँ तक आ गई है, चांदी की अभी बाकी है। और 10% या 13% अगर मैं सोने के अंदर देखता हूँ तेजी नेक्स्ट ईयर के अंदर, चांदी के अंदर 30 to 35% अभी भी मुझे दिख रही है।
Moving on and shifting focus, then Eurozone inflation has dipped as expected to 2.2% for the month of March. In fact, calmed by an easing of energy tariffs and prices in the services sector. So those are a couple of factors that you have there. Inflation in the single currency area reached 2.2%, down slightly from the 2.3% for the month of February. Remember that this comes after recent preliminary data also showed that inflation came in lower than forecast in several major Eurozone economies.
Moving on, China and India's relationship take the form of dragon-elephant tango, a dance between their emblematic animals. Well, that's what the Chinese President Xi Jinping told his Indian counterpart Draupadi Murmu while exchanging congratulatory messages yesterday, marking the 75th anniversary of bilateral relations. But she also said that both countries should work more closely together, according to a report. And the Chinese and Indian presidents exchanged congratulatory messages yesterday, the 75th anniversary of the start of their diplomatic ties, as tensions ease after 2020 clash between their troops along their shared border in the Himalayas. And besides Xi Jinping and Murmu, Chinese Premier Li Qiang and Prime Minister Narendra Modi also exchanged congratulatory messages respectively. Now moving on, we caught up with Ashok Sajjanhar, the former ambassador, and Kalpit Mankikar, the China fellow of ORF, to decode India-China relations and where it is heading on the backdrop of Trump tariffs that are yet to come in. Listen in.
China wants not only to be the hegemon in Asia, but it wants to be the hegemon in the world. So, while it calls for a multipolar world, it is working towards a unipolar Asia. It does not want to see, so this move by China, what the Chinese ambassador has said, it's a very tactical move. It is only for the time being. It is not, strategic or visionary or a long term. In any case, I think it wants to deal with it, take care of the situation as it prevails today. so that the blow that comes its way from Mr. Trump, that can be softened to some extent by trying to build this sort of front against the pushback that it is receiving from America, from Donald Trump. But it does not have anything in terms of long-term having good relations or better relations with India. So India has to be very mindful of working with China to the extent that it helps to for its own advantage, for its own purpose. But I think it is India will have to be very, very cautious and think twice before it takes even a single step moving forward. But
I mean, see, it's nice for China to talk about the elephant dragon tango. I mean, this has been going on. This has been since the time President Trump is back in the U.S. China is trying to sort of swing back to India. Now, I think China. The problem is that China looks at India from an economic prism. There is a prism of competition. Hence, the issue of the elephant dragon tango it's a nice concept, but what about China willfully blocking the transfer of technology, equipment, and personnel when it comes to infrastructure projects that are going on in India? So I think they have to come very clear on the intent.
Alright, then moving on to some somber news, then death toll from the devastating earthquake in Myanmar continues to rise. So far, it has reached over 2,700. Over 4,500 people have been injured and 441 people are still missing. Meanwhile, search operations are still underway to find survivors from the rubble. United Nations had surveyed the earthquake damage and urged the global community to ramp up aid before the looming monsoon season worsens the already catastrophic conditions.
Correct. With that, it's now time to take a very short break on this edition of Market Cafe on ET Now. Stay tuned for more updates on the other side. Welcome back to Market Cafe. You're watching ET Now. Well, it's now time to give you a quick Asia market check. Well, the markets were subdued as the Trump administration prepares to roll out tariffs. The markets opened higher on Wednesday as investors brace for those tariffs. But after opening slightly higher, so Japan's Nikkei was down 0.15%. But this is after the Japanese Prime Minister Ishiba said that he was imploring Trump not to impose higher auto tariffs on Japan, a long-time US ally. Now, the central bank survey has also found a worsening in business sentiment among big manufacturers in Japan. Meanwhile, over in South Korea, the Kospi also opened higher but is down about 0.5% currently. This is after South Korea's inflation climbed 2.1% year-on-year in March, which is compared to 2% seen in February. Next up, in Hong Kong, Hang Seng Index was down almost 1%, while China's Shanghai Index was down, trading higher at about 0.7%. Now, remember, all these moves come as the markets are preparing for the Trump's tariffs. Back home, the Nifty yesterday closed at the 23,165 level. Well, as far as the implied Nifty is concerned, it points to a positive start for the Indian market above the 23,300 levels. Hello and welcome back to Market Cafe on ET Now with me, Kanishka Sarkar and Shreyansi. Well, as the financial year wraps up, let's get you some updates on the domestic front. Well, the government's cash registers are ringing loud and clear. Now, gross GST collection soared 9.9% year-on-year, hitting an 11-month high of 1.96 lakh crore in March. Well, that's a healthy 6.8% jump from February's 1.84 lakh crore, proving that India's consumption engine is firing on all cylinders. Now, even as the net GST collections clocked a 7.6% rise year-on-year, giving the government a strong revenue push. Now, is this a sign of a booming economy or just a fiscal year-end spike? Now, if we look at state and central collections came in at 35,000 crore rupees, whereas state GST collections came in at 43,000 crore rupees.
Bank of India is back in action, rolling out another 80,000 crore rupees in open market operations or OMO purchases to keep the financial system flush with liquidity. In fact, 4 tranches of 20,000 crore each are set for April 3rd, 8th, 22nd and 29th. So mark your calendars there. And this is not a one-off move. Just last month, you did have the RBI pumping in 1 lakh crore rupees via GSEC buys and even threw in a $10 billion rupee swap for good measure as well. With liquidity in focus, will this be boosting market sentiment, stabilizing yields, or just be another balancing act? Only time will tell, but the RBI is watching, and so are we, isn't it, Kanishka?
Absolutely. Now, moving on the backdrop of IndusInd Bank's accounting discrepancies issue, DFS Secretary will hold a meeting with commercial banks on April 3rd with the heads of PSUs and private banks. Now, the DFS Secretary will review the performance of the government's flagship schemes. Now, Prakash is standing by with more details.
Yeah, that's an important development coming in, as we are learning from our sources that the DFS Secretary will chair an important meeting with the commercial banks on April 3, wherein various issues are likely to be discussed. Heads of public sector along with the private sector banks will attend the meeting, and the government is likely to review the current status of flagship schemes such as Mudra Yojana, Stand Up India, Swanidhi Yojana, among others. The financial performance of the banking sector, including credit growth in some sectors, may be discussed. In addition to that, sources are also suggesting that the performance of NARCL will be discussed by the DFS Secretary. In fact, the whole resolution process will be reviewed, and certain instructions are likely to be given to the banks and NARCL to expedite the process, and that will support the banking sector going forward. So far, NARCL has acquired 24 stressed accounts amounting to rupees 1,10,000 crore, and therefore government is now reviewing the whole process to speed up the resolution process. Along with the public sector banks, the heads of private sector banks such as HDFC Bank, ICICI, Axis Bank, and Nursing Bank will attend the meeting, and that is going to be a very crucial meeting as it is happening against the backdrop of Nursing Bank's accounting discrepancies issue, and therefore certain instructions are likely to be given by the DFS Secretary to strengthen accounting practices.
All right, then thanks, Prakash, for all of those important details. But switching gears to Motown, then let's now take a look at the auto sales numbers for the month of March. In fact, Srishti is joining in with all of those important details.
Well, the key outlier within the March auto sales data is the tractor division, because look at the numbers for Escorts as well as M&M. Not just that the company have recorded a double-digit YOY growth, but look at the commentary as well, where both the companies are actually highlighting that after a good month, that is March 2025, they are expecting the sales momentum to continue. And the leader, of course, that is M&M, is highlighting that they expect in Q1 of FY26 that expected to be even better. And both the companies' numbers were actually above the street estimates. So tractor division is one of the key outliers, but other than that, within the two-wheeler space, we also have numbers from Eicher Motors Royal Enfield, which did fairly better versus the street estimates. The company did surpass that 1 lakh unit mark, and some of their newer offerings have been doing pretty well for themselves. And within the same segment, we also have TVS Motors as well, wherein the exports have done very well, and the numbers were actually above than what the street was penciling in. Now let's talk about the passenger vehicle segment, because herein M&M Automotive Division as well as the numbers for Maruti Suzuki, they were actually in line to what the street was penciling in. But this is the segment to watch out for, because from this month itself, that's from April 2025, all of these companies have already announced their price hikes that will going to be applicable, and the impact on the demand will be the key monitorable, and that will be something that we will be watching out for. And lastly, from the commercial vehicle segment, a bit of a mixed bag. Why so? Because Ashok Leyland numbers were actually above than what the street was penciling in. Their MHCV segment did very well for themselves, while for Eicher Motors VECV, the numbers were actually in line. So what we can call it that, yes, of course, the tractor division did really well for themselves, but other than that, no other company has actually disappointed on the sales data. That is another key takeaway. Mostly all the numbers are either in line or the numbers are above than what the street was penciling in. Back to you.
Well, that's the snapshot as far as March auto sales data is concerned. Thank you, Srishti, for that. Now, moving on, Bharat Khera, the Additional Secretary BIS, discussed with us how artificial intelligence is being used to deal with consumer complaints and how it can aid in identifying the nature of complaints as well. Listen in.
If you use AI, one, the efficiency improves. The scalability of the portal becomes much bigger, and then you are able to classify them into different categories of grievances. And once you know that there are quite a few grievances pertaining to a particular product or in a particular sector, then you can take remedial measures. You can onboard those companies to redress these grievances. Wherever there is a reason for class action, the Central Consumer Protection Authority can take them as class action and move forward. So AI has enormous potential. Plus, it can also help you in using predictive analytics to find out what is the nature of consumer dissatisfaction. Okay. So, for our department, as is happening in any other sector, generative AI is equally important for our sector also.
Alright, and with that, it's time for a very quick breather on the show. When we come back, more news and updates on the other side. Welcome back. Thank you so much for staying tuned in. Well, time now to get you the list of stocks that you should be keeping on your radar bright and early this morning. In fact, Gaurav is standing by with just that list. Gaurav, over to you.
Well, yes. First, let's talk about Pidilite Industries because Mr. Bharat Puri has now been resigned has now resigned actually. It's actually that they have completed his term, and with this, Mr. Sudhanshu Vats will be taking over as managing director. Other than that, Shriram Finance is in focus because board of directors has now considered and approved 100% acquisition of the stake in Shriram Overseas Investment. JSW Energy is also going to be in focus because company has said that they have achieved a significant milestone by adding around 3.6 gigawatt of generation capacity in FY25. In fact, company has said that the total capacity now stands at 10.9 gigawatt, which is actually much higher than the 10 gigawatt target that they had for FY25. Moil is also going to be in focus today because company has now announced a price revision somewhere in the range of 0.5 to 3%. RITES is going to be in focus, and this is on the back of the negative news flow. Now the company has informed that there is a termination letter for major order which was secured by the company from UPSBCL. Now company has said that there won't be any financial impact because the execution was not started, but definitely a negative impact can be seen on the stock price. Biocon is going to be in focus today because board is going to have its board meeting on 4th of April to consider fundraising via CPs or other private placement options. CSB Bank is also in focus today because the company came with their quarterly updates, and if you look at the growth, deposit growth was at 24% and loan book growth was at 29%, which is much higher than the industry growth. And lastly, now that it is year-end time, there are a few companies who have received income tax demand. So first, let's talk about some of the consumer companies which may get impacted. So we have got Dabur, Tata Consumer, Swiggy. All these companies have got a tax demand of more than 100 crore rupees. So definitely watching out on all these counters on the back of the news flow that we have received in the morning.
Thank you so much, Gaurav, for that list of stocks to keep on our radar today. Now, moving on, keeping with the equity space, from banks and NBFCs to autos and IT, what is Mihir Vora, the CIO, Trust Mutual Fund, positive on, and which sectors is he avoiding in this current market scenario? Let's listen into that excerpt.
Banks and NBFCs, the large banks and NBFCs had underperformed actually almost for 1.5 to 2 years. And that was with good reason. Credit growth was coming down, liquidity was tight. RBI was telling some of the large NBFCs to take it easy on the unsecured loans. Also, there are structural and fundamental reasons for the slowdown, and we did see a good significant derating of the large banks and large NBFCs. All these factors are now getting adjusted upwards. First, you have a low base to start from. RBI is getting dovish. Liquidity is being provided. The interest rates are being cut. Government spending, which was a drag, is now coming back. So all those sectors, all those factors, I think, will continue to help the economy. And if we assume that we meet our 6.5% GDP growth target for this year and next, which is FY26 and FY27, then credit in the system has to grow. We are running at almost only 10 to 11% credit growth for a country growing at 6.5%. That's not possible, because for the industry to really grow, you need at least 1.2, 1.4 times credit growth to GDP, and we are talking about nominal. So credit growth has to come back to 13, 14% in the next few months. And we have a good base to start from. So financials, both from the terms of growth as well as in terms of valuations, are looking quite attractive, I would say.
Okay, so Mir, then it comes back to some themes where you think that we are in for an earnings surprise. Last year, that theme was largely where we got a lot of earnings surprise was PSUs, Defense Railways. Which are the themes for FY26 where we are in for an earnings surprise? Where markets are expecting 10%, we may get 12. Where markets are expecting 12, we may get 15.
So actually, the cyclicals which you talked about, the construction, capital goods, defense, railways, etc., started off with a lot of expectations last year, and then as the ordering etc. got delayed, we saw downgrades, and now we are at at levels where people are not expecting much. But in the last few months, a couple of months, we have seen that ordering has come back. So in these cyclicals, again, I think we should start seeing upticks. You might see some upticks in some of the discretionary names, FMCG names, if you really see inflation coming down and metal prices coming off. So we've had situations where in the last couple of months, steel prices etc. have gone up. So there is some expectation building up of margin pressure. But if that does not come through, then you again might see some of the discretionary names also, getting better in terms of margin. The other place I would look for probably in the second half of FY26 is financials. As liquidity starts easing, and if the RBI decides to keep liquidity even more easy than what it is now, then you might see further upgrades in the financials sector.
I wanted to get your view, especially on the auto space. Today, you have the auto sector that is in focus on back of what Trump has announced. But keeping that news piece aside, how are you gauging the entire auto space? And when you talk about auto space, also I want to get your view on auto ancillaries.
Sure. So in general, we are not that positive on auto because commercial vehicles, there's not much volume traction. Passenger vehicles, again, there's not much volume traction, but there's a couple of names in our portfolio which are doing better because they have a good, SUV or MPV kind of a basket. That's which is growing faster. But in general, passenger vehicle growth is not expected to be more than 3, 4, 5%. Two-wheelers, again, there is a little bit of traction compared to the low base that we have. So we are a little positive there. But if you see, two-wheelers growing at maybe 8, 9%, cars probably at 3 to 5%, commercial vehicles also not showing growth. So in general, the situation is not that great. Within the two-wheeler space, there is case for looking at the premium names, the higher end names, because that's the trend that we've been seeing consistently, that the higher end specs vehicles, whether it's SUVs or two-wheelers, bikes, etc., are doing better. So those kind of names we are positive on. But overall, I would say we are underweight. Auto ancillaries is a mixed bunch, and we have a good small cap, mid cap spectrum to choose from. And there are many interesting companies which are doing extremely well in spite of the overall pie not growing so well. So they are expanding their product range, they are expanding capacities, they are also going for exports. So we have 3 or 4 stocks in our portfolio in the auto ancillary space, which are doing things differently to basically make sure that they are not that directly impacted by the slowness in the industry. So these are stocks where we can see that there is earning visibility for the next 2, 3, 4, 5 years, even without the assumption that the sector will grow. So those stock picking opportunities are there in the auto ancillary space.
Do you see your top 5 holdings changing in next 12 months?
Sorry, could you repeat that?
Do you see your top 5 holdings, which is a combination of banks and other consumer names, do you see that changing in next 12 months?
No, I don't think so. We are basically growth investors, and I do firmly believe that the domestic cyclicals will continue to do better than the exporters. So we are underweight on large cap IT. We have some mid cap IT picks, but in general, IT is underweight for us. Commodities, energies is underweight for us. Most utilities are underweight for us. And we are positive on the financials, including capital marketplace And most of the industrials like construction, capital goods, and the sub-segments like defense, etc. Power is a big theme for us. Within healthcare, we are more positive on some of the CDMO names, some of the laboratory names, and a couple of hospitals in the name. So I think we are going to be we are going to we will continue to be positive on the healthcare space, whether it's CDMO or diagnostics or hospitals, and we'll continue to be positive on industrials like capital goods, construction, defense, etc., power that we talked about, and financials. I think both the segments, lenders as well as non-lenders. In non-lenders, we have the capital marketplace, etc. Those are also looking interesting because all these segments have really gotten beaten down in the last 3-4 months.
Alright, then let's keep it going with commentary. Then veteran investor Kalpraj Dharamshi's first ever television interview is something that you should see. Here's Value Quest's Ravi Dharamshi in a conversation with none other than Kalpraj Dharamshi as he reminisces lessons from his close aide and big bull Rakesh Jhunjhunwala, his investment journey so far, as well as the themes that he finds interesting. All this and lots more. Take a look.
He is actually an original investor and an original thinker. Like, he figured out all the concepts of investing which we read about from Warren and Charlie and all these Peter Lynch's of the world, and in a very desi, earthy way. Like, for example, he would say कि invest करना है तो ये धंधा क्या पैसा फेंक के बनाया जा सकता है. So basically, can you throw money at a business and build it or disrupt a business? So, which he's basically talking about moats, but he figured out moats in his own way. Okay, one thing which I have heard only him say and nobody else is, क्या मैं ये stock को P देना चाहूँगा? What is PE? PE is actually giving someone more than what he's earning. And the third thing, which he always keeps in his mind, never articulates, but will you lend money to this promoter? अगर तू उसको 5 करोड़ रुपया lend नहीं करेगा, तो उसका 5 करोड़ का share क्यों खरीद रहा है? So basically, that test which he internally came up with was very clear. His investing style, like very innovative or very original again. He had two portfolios. He had one portfolio in his mind, he had two portfolios. One was made of businesses which had nothing to do with the government, which had very simple businesses, which were low debt or no debt, which were cash up front, and if possible, negative working capital. So banking, insurance, Nestle's of the world, so consumer brands, and D-Mart or Jubilant. So these were the businesses which were his core portfolio. There were others which he called Barsati Medak. So those were to be sold at the first hint of trouble in the market. He was a very fantastic judge of the market, or is a fantastic judge of the market. So whenever he saw overvaluation, euphoria, blah, 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 that part of the portfolio went out. This part of the portfolio, come what may, he will not sell. So all these things are original to him.
How did he manage to do that without reading a book? Because all investors swear by reading.
So yeah, he's got a genius level intellect. He may not speak, he may not articulate it much, but in any room, he's the sharpest individual. Okay, then he is the best listener I have met in my life. And he'll judge a person in the snap of a finger. He will know in his mind, say, for example, if he is to invest in automobiles or cement or software or ABC, he will know which person to call to get an update to the minute. There are people in markets who are very, very, very updated on so many things. And he would have them on speed dial. In one phone call, he'll update himself on industry thoroughly. Or if he wanted knowledge about a promoter or a person, he would know whom to call to figure out things about that person. For a value investor, there will be sectors which are ignored. There will be sectors which are undervalued for whatever reason. Like over the last 5 years, this China Plus One gave us chemicals. Realty was ignored because it was a bad sector. Entire realty sector was 1% of the entire market cap of India. Then you had PSU banks. They were, pariahs, dogs. You don't ever invest in PSU banks. But they gave fabulous returns. So there will be stocks and sectors like that. And there will be sectors where, which are hot. And those you avoid.
You used to be you would catch a theme and then you would pretty much buy the entire sector or many small companies and everything. Today, I think you have a slightly different approach to that. Even if you catch a theme, you probably won't buy across the board. What has changed and how have you evolved over there?
I wouldn't say it has changed that much. Say, for example, realty. We caught that just 2-3 years back. And I did a basket. But the basket was basically, see, Mumbai, Delhi, Bangalore are 50-60% of the realty market. Delhi, there was only one man standing, DLF. Bombay, you had 2-3 players whose balance sheets were good, who had land banks and who could execute. And Bangalore, similarly, 3 players. So it became easy, but it was still a basket approach. Now, the genesis of that earlier basket approach was a lack of in-depth research, stocks being available dirt cheap, and when CRAMS, for example, contract research and manufacturing. So this Arvind Joshi, my friend who started ValueQuest Research, he came up with this acronym. Even the management of the companies did not know that this is what could happen. So at that point in time, there was no way for me to know that, okay, this is the company which is going to succeed.
Well, key investment strategies coming in from market veterans. Now, moving on, let's get you some developments to track today. Well, the Waqf Amendment Bill is all set for discussion in Parliament today, with the government allocating 8 hours for debate. Now, the bill, revised after a joint parliamentary committee review, will be presented by Minorities Affairs Minister Kiran Rijiju. Next up, Mumbai is set to get a temporary respite from the heat amid IMD prediction of thunder showers today. Meanwhile, an orange alert has been issued to several parts of Maharashtra. Now, this comes as Mumbai recorded its maximum temperatures of 33 to 34 degrees Celsius on Tuesday.
RCB is all set to take on Gujarat Titans in Bengaluru today. RCB, in fact, has secured back-to-back wins in its last 2 matches and will be playing its first home game of the season. Meanwhile, Gujarat Titans recently lost to Punjab Kings at home but secured a victory against Mumbai Indians in Ahmedabad. But with that, we're completely out of time on this edition of Market Cafe on ET Now. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.